Good morning and welcome, and thank you for joining us for this webinar for the launch of our new TB Amati Strategic Innovation Fund. I'm Colin Thompson, one of the Amati sales team, and presenting today are the Amati Strategic Innovation team, Mikhail Zverev, Graeme Bencke, and Gareth Blades. Paul Jordan will give a brief introduction in a moment, covering how the idea to launch the fund came about. Innovation is one of the most exciting areas of opportunity for investment at the moment. However, we believe that now's the time to broaden out that pursuit of innovation away from some of the high growth, low profitability stocks that have proven a lot more vulnerable than expected recently. We view innovation as an area of the market where we can extract value without taking excessive risk. Our approach combines a strong valuation discipline with a broader opportunity set than many competitors' innovation funds. And the team are very well equipped, both in terms of investment experience and academic and scientific experience, to select these stocks with the optimum risk-return profiles. The BrightTalk platform offers the facilities to submit questions, so please enter them as they occur to you during the presentation. And with that, I'll hand over to Paul.
Thank you very much, Colin. When we started Amati Global Investors 12 years ago, we named the company with the word global in the middle, and that raised a few questions at the time because we were solely focused on investing in UK smaller companies. And the reason we gave and still give for choosing that name is that we invested and we still do with a global mindset. And the London stock market is, as all of you will know, is a very global market where companies come from all over the world to access public finance. But in the back of my mind, even when we started the company, there was a long-held wish that one day we might start a global equity fund. And this has now come to pass, and I'm really, really delighted about that. Those of you who have known me for a long time will know that when I worked at First Date Investments, the very first person I ever hired was Mikhail Zverev. And so we go back a long way, 20 years as it happens. And I'm really delighted today to be introducing this team of investors to you, Mikhail Zverev, Graeme Bencke, and Gareth Blades. And Mikhail and Graeme are both new to Amati, and we're really delighted to have them joining us. And they're both very distinguished and experienced global equity investors with a long track record in that asset class. When Mikhail was talking to me about the possibility of joining Amati and setting up this fund, we talked quite a lot about how we should design this fund and what sort of what hat to hang it on. And when Mikhail left First Date and went to Standard Life, he developed a process for investing in global equities that was very much based around spotting key moments of change in companies and seeing those as value inflection points where it would be possible for investors to have some informational advantage over a company and to spot the beginnings of a trend that would then create a lot of value. And as we discussed this, we ended up realizing that actually a really great way of characterizing that kind of change, because it's not change for change's sake that we're talking about, it's change which is going to lead to enhanced profitability and a strong business. A good way of defining that would be around the word innovation. Of course, innovation is something of an overused word these days, and it's made to do a lot of work. So we're going to explain very carefully in this presentation what we mean by it and how we're using that as a sort of hat to hang the investment process for this fund around. We're not talking about innovation for its own sake, and there's no what we might call doctrine of the bleeding edge involved in this fund. What we're after are companies that have, in the broadest sense, a license to innovate, where they've assembled all the right ingredients, whether it's from management teams to finance to business model to scientific development or some newly created piece of IP. Whatever that involves, it's broader than just about inventions. When we design funds, we always think about how we make them good for the long term, and we like to present something to investors that they can invest in for the long term and not have to choose, is now a good moment to own this or is now a bad moment to own it. And the key to that is diversification. So we like to think we've devised all of our funds with the ability to have really good diversification, and that's true of this fund too. And what the team will explain later on is diversification around investing not just in pioneers of innovation, but also enablers and adopters of innovation. And that's key to creating good risk management in a portfolio, and the ability to have positive investments to make through all parts of the cycle in markets. And I know a lot of you are going to be thinking, well, from a timing point of view, this doesn't, this feels like maybe not a great time to launch a fund. There's a war on, markets are down. There's a huge amount of fear around the future is uncertain and feels uncertain. Of course, the future is always very uncertain, but it just feels very uncertain at the moment. And I guess from our point of view, the reason that we think that now is a good point to launch this fund is maybe for all those reasons in reverse, that it's much better to launch a fund when there's quite a lot of fear around, that there's access to the right investments at much better prices. Of course, we can't call the bottom of the market, and we never really try to say to market time. It's a little bit of a fool's errand. It's not to say we don't pay close attention to the macro economics and macro strategy, but it's a fruitless point to really try and market time. But what's for sure is it's much better to buy a fund when markets are down than when they're reaching new highs. And so I think the team are quite excited about being able to launch this fund right now. And the staff at Amati, and myself included, we're really excited about this launch. Many of us, including me, are going to be investing significantly in this fund. We hope to do so for a long time to come. So now I'll hand over to the team to present the details of the process and what they're going to be doing. Over to you, Mikhail.
Thank you, Paul. Thank you. So this is a high conviction global portfolio that invests in companies that do something innovative in the broader sense of this word. They develop innovative products, they deploy innovative services, or they adopt innovative tools or business models to their existing businesses, often to address some very important societal, economic, business, consumer challenges. And we think it's both a source of great value creation in the economy, that sort of activity, but it's also something that market misprices. And that's a really important point for us. It's a very exciting opportunity set. It's growing, it's diverse, which makes it a very interesting space for an active stock picker. There's a lot to choose from, but it's also inefficiently priced. The market is mispricing innovation. And we've built a process that embraces that and looks to take advantage of that for our clients. We're all about very bottom-up, very granular discovery of what we call innovation frontiers, valuable areas of innovation, which market somewhat underestimates. It's not about consensus, top-down, big-picture themes or market reviews. It's very granular. We explore complexity, almost embrace complexity, because that's what the opportunity is. Innovation can be complex. We think we're equipped to understand it, but it's doing work on that complexity is what brings you insights and gives you differentiated stock ideas. But we also have this broader approach to innovation investing that Paul alluded to, not just the bleeding edge, earlier stage, immature, often not profitable or cash generative companies, but companies that are already more accomplished businesses and still benefit from this innovation that they enable or adopt in their business models. And importantly, we think at Amati we have a fantastic platform to build it on. We have a real analytical and informational advantage in understanding more about the leading edge of innovation than an average global investor might through the work of the venture capital trust process and the smaller companies trust process. And we'll give you more details about that in a moment. And as a team, we think we have the skill set, we believe we have a track record and experience, and most importantly, we have the enthusiasm to embrace that opportunity and to be aligned with that opportunity.
Great, thanks, Mikhail. And a few words on the fund itself. First thing to note is that it is genuinely a global fund. This is not a sort of niche sector or thematic portfolio. It's going to be very concentrated, high active share fund. We're looking at 30 to 40 stocks as our typical holding. And again, all very high conviction ideas. So it's a go anywhere fund, all cap, style agnostic. We are sort of guiding investors that there'll be a focus a bit away from the mega caps, where a lot of the other innovation funds you'll be aware of tend to reside. But towards the sectors where you would see typically a lot more innovation. So that's areas like technology, healthcare, industrials. The focus is, as with the other Amati funds that you're aware of, a sort of longer term return focus, 3 to 5 year rolling time horizon for outperformance, which we think is about right for equities. And crucially with this fund, you're looking at, as Mikhail briefly mentioned, a balance of holdings, not just very sort of early stage innovators. We're looking for innovation at the right price. So we're looking for the right balance of risk reward. And you can see on this slide that the current portfolio has a P very similar to the market. And that's what we're looking to identify. Companies where we're getting quality innovation ideas, good growth stories, but not paying a premium for them. And again, a balance of risk across different sectors, not just a single thematic approach.
We think we've assembled a great team to do this. I'm very excited to join. Of course, I'm delighted that Graeme chose to join us as well, and delighted that Gareth is going to be involved. Between the three of us, we have a fair few years of experience, quite a few decades altogether. We had run global equity funds before. We delivered top quartile performance in what were very high conviction concentrated strategies for over multi-year time horizons. And if we looked, or rather I should say, when we looked into what drove that performance, what are the most rewarding contributors to that performance for our clients, we saw that innovation consistently featured as a key driver of that. So we, in many ways, we're playing to our strengths. We've run multi-billion global equity franchises at some of the largest asset managers in the world. We put some of the logos here on the left-hand side of the slide. But we're really excited about this new chapter in our career here at Amati, and we'll really looking forward to launching this in a week's time. We also have, dare I say, the word passion is somewhat overused, but we're very enthusiastic about the sort of complexity research that this process entails. This is the stuff that interests us. We have a combination of technology and life sciences degrees that we think equip us pretty well to enjoy researching those complex technical domains. But we also have our business heads on, as we like to put it. We've had a combination of accounting, finance, and economics and business management degrees that serve to remind us that you can't just fall in love with the science, however exciting that science might be. There has to be, at the end of that innovation journey, there had to be a profitable, if you like, high quality business model. So have this combination of technical knowledge and understanding to explore that complexity of innovation, but also a level-headed business accounting financial analysis to remind us that this has to make money for our investors. And something we're proud of between the three of us, we didn't just interact with innovative companies as detached observers or investors in shares. We worked as consultants, as investment bankers, as advisors. We commercialized intellectual property for innovative companies. We raised capital. We advise them on strategy and on investor relations. So that kind of hands-on frontline experience we think is pretty valuable and aligns really well with the work that we're trying to do here. And we think Amati is a fantastic place to build this, a fantastic platform to build this product on. Graeme will speak about this in more detail, but for me this was there's an element of history. If I looked back at what was the most productive source of returns that I was able to generate for our clients, and where would I have an institutional organizational advantage in continuing that process, Amati really stood out. But I'll pass on to Graeme to get into this in a bit more detail.
Yeah, thanks, Mikhail. I think that analytical and information advantage is obvious when you sort of think about the UK as being a centre for excellence for a number of different areas. I mean, it's sort of well regarded as a centre of excellence for life science, materials science, different parts of industrials and healthcare, and the people who are driving those, that innovation in the UK are the same people that are meeting on a daily basis the Amati, VCT, and small cap team. So that gives us access to an amazing array of founder entrepreneurs and technical people who are really at the cutting edge of innovation. And that network gives us an enormous advantage when it comes to analyzing innovation frontiers. When we're looking at a particular technology or a new approach, we have a fantastic Rolodex of people we can speak to. And that's a huge advantage that I think a lot of our peers would really love to have.
It's a really practical, it's proven beyond reasonable doubt in our minds. But one of the interesting observations that I've made when I looked at stock by stock attribution of the performance of the funds that I ran, and relieved, if you like, the history of some of the most impactful investments that clients benefited from the most, and asked myself, what is the pivotal? You never really can parse out exactly what was the decisive factor, but one of the consistent features has been, well, I've heard this story first in the small cap world. And we're talking about some of the fundamental stuff. I mean, Apple, the first time I saw a smartphone running a 3D interactive game was on a flip phone, Samsung flip phone, rigged up in the lab at Imagination Technology, which was a small UK listed company at the time. I want to say 3 years before Apple launched their iPhone. And then you could see through the eyes of the smaller company that smartphones will become this amazing platform for computing and entertainment in the consumer world. The first person that explained to me in terms that I could understand, I guess, that the world of pharmaceuticals is moving from small molecule chemicals of the kind of 80s vintage to this new biologic drugs, and you move from synthesizing them in a refinery style chemical plant to growing them in vats, through genetically modified bacteria. Was a company called Cobra Biologics, or Cobra Biomanufacturing as it was called at the time. And that led to some really profitable investments we've made over the years in the CDMO industry, and hopefully will continue to make. And this isn't just a matter of history. If I look at the work we've been doing over the past month or so on the portfolio holdings and on some of the new ideas, we spoke to a world leader in driver monitoring system, the sort of software that detects that you're falling asleep at the wheel, which is a very sophisticated artificial intelligence algorithm. And we asked them about, what is the software, what's the semiconductor platform they're using to run their software on? And they pointed us to what we think is a potentially very interesting US listed semiconductor technology company that is not really on top of people's minds, 3 billion market cap. Later today, we're going to have the same exact conversation with a private company which develops automated driving solutions for various niche applications. And again, we're hoping that we'll learn something new. So this, we're sort of industrializing this informational advantage in our process in a way that is already making a lot of difference and had made a lot of difference in the past.
Yeah, and I think beyond just that sort of analytical advantage, Amati, many of you will be familiar with Amati. It's a very thoughtful, focused, specialist investment house. It's investor-led, investor-managed, and that suits this type of product extremely well. And you can see Amati, you can see some of the awards on this screen. I mean, it's been a very successful organization. So both Mikhail and I were attracted to starting the fund here because of all of those things. There are a huge number of advantages from our perspective. And that's why both of us are going to be committing a very significant amount of our personal capital into this product.
As we've already touched on, our own investment experience highlights that innovation leads to change, complexity, and uncertainty that impacts the future fundamentals of companies and the value chains in which they operate. And the market is not always equipped to understand and analyze this and can be actively biased against it. But this creates the opportunity to generate non-consensus ideas that can lead to global equity alpha. And there's a growing body of academic research that supports this thesis that the market is not efficient at pricing the impact of innovation into stock prices. But through analyzing multi-decade company data and investor behavior, these papers highlight ultimately that excess returns can be generated when the complexity of innovation is properly understood and when that innovation is appropriately valued.
So to give you a sense of the sort of things we're interested in, I'll run very quickly for one of such examples. So this company, it's called PTC. It's a 12 billion market cap US company. So not really on top of most people's minds, not your everyday global portfolio holding. But they're doing something really interesting. They produce digital design, digital manufacturing, and digital after-sale service tools for industrial manufacturing companies, a number of industrial sectors. And the interesting thing about industrials is that if you look at how different industries digitalized, and this is the chart on the left-hand side here, this bar chart, you'll find that there's a real difference between individual sectors. So banking, financial services, professional services, as measured by technology spending as percentage of revenue, according to Deloitte's technology survey, has become fairly digital, up to 10% for banking and securities industry of revenue spent on technology. Manufacturing really lags. It's a conservative industry. It's a very complex industry, technically challenging one. The stakes are high. The cost of mistake is high. They were slow to digitalize. But the importance of digitalization for manufacturing is going up and up. I met a CEO of an IT service company relatively recently who put it really well. He said, the modern factory increasingly looks like a computer. And the product that you manufacture in that modern factory increasingly looks like a computer. Think about the number of software code lines in a modern car. And then when this product is out in the field, it behaves like a computer. It's connected. It can offer remote diagnostics, over-the-air software updates, all those things. And yet, there's a real digitalization debt, if you like, that manufacturing needs to catch up with. And this is where the PTC comes in. And it's really this company is at the leading edge of this work. So if you look at this pictures on the right-hand side of the slide, the top is their augmented reality tool. Now you've heard of augmented reality as a bit of a hypey kind of futuristic thing. We had Google Glass augmented reality device, it flopped. We had Pokemon Go in the consumer space, that was entertaining, but not particularly impactful. This augmented reality tool is in the field, is working, is adding value, companies making money on it. Here, for example, you have a service engineer looking at a jet engine through the glass, if you like, of the engineer's tablet. And you can see not just the image of the jet engine itself, but information about the different components, the serial numbers, whether they're due for maintenance, or the predictive maintenance analytics tool suggests it's worth inspecting them because they're overdue an inspection. So it makes a real difference in the field. The one below that, in my opinion, is even more interesting. So this is a Ski-Doo, which is being designed. So this is a digital design tool, but it's integrated seamlessly with a partner company's product to PTC, which allows you to simulate digitally physics of how this product functions. So in this particular case, you can see how the heat from the engine propagates through Ski-Doo. And you can see how it makes sense here. You don't want your Ski-Doo to get too hot and uncomfortable when the product is developed. So the design engineer can see, as he or she tweaks the geometry of the product or location of different component parts, how the behavior of the product changes. And this really accelerates the design and development timelines, saves companies a lot of money. So a really good indication of the sort of excitement and leading innovation that can happen in the sort of frontiers we're exploring. But at the same time, this company is on 20 times earnings. It's got more than 4% free cash flow yield. It's growing mid to high teens over the next several years. So it's actually representing what looks like a pretty significant value because it's a little bit off the beaten track. It's a little bit further into the granular detail. And that's the sort of opportunities we're looking for.
Yeah, and I think that's a very good example of how we're thinking about innovation generally. So we are taking a very broad approach here. Not just looking for those kind of disruptive innovators, but also that more incremental innovation opportunity. The pioneers are the companies that people typically think about when they think about innovation. These are the early stage businesses sort of creating those new dynamics. But they are supported by other companies we call enablers, who are providing support maybe on the design or the manufacturing side. And then beyond them, we have the companies that are maybe the fast followers who are sort of implementing that innovation into perhaps an existing product range or augmenting their product range with new designs. And the point is that these companies, because they're at different stages and using innovation in different ways, tend to be valued very differently by the market. And there are periods where, for example, pioneers will be very attractive, unlike the last 2 years probably, where that part of the market has been extremely expensive. And then there are periods where some of these other companies, the enablers, have a much more attractive risk-reward profile. So paying a much lower multiple, but still getting the benefit of growth that comes from this innovation frontier. And this example here, is just very briefly, is electrification of vehicles. Everyone's aware of Tesla, very much the kind of pioneer in this space, but trading on extremely high multiples and still quite an uncertain outlook into the future. Whereas if you look at the companies that are enabling them, Infineon is an example of a company that provides semiconductors into the automotive industry, benefiting from that same explosive growth in EVs, but trading on a much lower multiple. So perhaps a more attractive risk reward at this point in the cycle. And then Volkswagen, everyone's aware of, again, kind of considered to be a bit of a slow and dull auto company, but as they have invested in EVs, they're starting to see real traction there, and perhaps again a more interesting way of playing this theme, this innovation frontier. So the point of splitting the portfolio this way across these three categories is that it gives us a great diversification benefit that other innovation portfolios don't have. So it provides us with a much more balanced set of risks across the portfolio, which we think is quite unique. But also it allows us to take advantage of market conditions. So there will be, as I said, periods where pioneers look very attractive, and we can skew the portfolio that way. But other periods where the risk reward is more attractive in some of the other sectors, perhaps the enablers or the adopters. So it gives us a lot of freedom, but also a strong sort of framework to create the risk balance that we're looking for across the portfolio.
Thanks, Graeme. We've built a very structured and disciplined investment process to take advantage of these opportunities, and it's mapped on this page. The first thing to say, we're really excited, frankly, about the amount of information we can work with in terms of our source of insights and source of knowledge. We see a lot of companies. We consider this to be one of the most important sources of information. We probably expect to see at least 500 between the three of us, probably more than that in a typical year. And of course, the broader Amati team sees even more, and we can benefit from those conversations too. We speak with external experts. We read widely. We read both industry and academic sources where this is warranted. And we benefit, as we mentioned before, from this, what we call Amati Innovation Network. Both proactively and reactively, opportunistically, if you like, we come across fund entrepreneurs, senior execs, and technical talent in these companies on the leading edge in their industries. They might be UK based, but they have global outlook. They know their global competitors, their global customers and suppliers, and will really help us map out the opportunity set. So when we think about the journey of the idea, we start with innovation frontier, and effectively we're asking, is this innovation valuable? Is this innovation differentiated? Does that create new functionality previously unobtainable? Does that improve functionality of something? Does that improve economics, lower costs, for example, of something that is a valuable economic activity? The second thing we ask about innovation is there adoption and traction? We have a favorite expression in the team, the future is already here, it's just not evenly distributed. So we're less about imagining the world in 10 years' time over the horizon, and we're more about finding something that's already making a difference somewhere. Think about augmented reality for PTC and jet engine maintenance, but it just haven't been broadly adopted, haven't fully proliferated through the system yet. And then we ask, what's the size of the target market into which this innovation will be growing, and what will be the market growth? So if we answer those questions, we have ourselves a really promising innovation frontier. and then we map it out. We try to understand what is the innovation cluster, as we call it. Who are the companies that play in that space? Some of them will be pioneers, inventing or pushing this technology forward. Some will be picks and shovel suppliers, enabling that innovation, enablers, as we call them, and some will just benefit from the tools, the solutions this innovation creates in their existing businesses, or maybe pivoting to catch up with those innovators like Volkswagen does, and those will be adopters. So that narrows down what is a very large and unwieldy global equity opportunity set, very exciting, but quite a lot of stocks to choose from. But that narrows it down to a very targeted list of research targets, and then we proceed to the fundamental analysis on those research targets.
Right, and so if you look at the way we've mapped that out here, we talk about the innovation test, which is really what Mikhail just outlined. But effectively, this is saying, what is the value of this innovation frontier? Who are the beneficiaries going to be? And that's what leads us to the cluster. And then from the cluster, we can identify the companies that we think are most likely to benefit from this innovation, and also offer the best skew of risk reward. So here we start with the company test, which is really about the detailed due diligence on the stock. And for those of you who are familiar with Amati, you'll have heard of Connex before, no doubt. And Connex is the platform that we share information across the team. So all of stock reviews and decisions and meeting notes are on there for everyone to see. And so this creates a great feedback loop for us when we do our research and post it up there, to get feedback from others who maybe have thoughts or views on this particular innovation frontier. And once we're through the kind of company test, then obviously we use the same sustainability test that the rest of Amati use, which is ESG and H, with H standing for human rights. And then we're into our non-consensus test. This is clearly a very important part of the process where, I mean, ultimately, you don't make money if you're thinking the same as everybody else. So we're trying to establish the value that we see from this innovation for this particular company. How is it different to what the market's already seeing? And if we're confident that we've got a story here and we've got an investment case, then we're looking then to sort of progress that stock forward. And it may be that in some cases, like the pioneer stocks in particular, they haven't achieved the sort of quality metrics that we're looking for at this stage, but we have to be able to see that roadmap to the quality. So as Mikhail said, we're looking for stocks where the future is already here, where the innovation is already playing out, but it hasn't yet fully played out. And that's very important. So we're not taking moonshots. We're not investing in things where there may be a return sometime over the horizon. And then putting that together, we come out with a number of stocks that we think are interesting for the portfolio, and then it's about deciding where do we see the best risk reward, what's the kind of combination that's most attractive, and that helps us to put together the portfolio, which again is very concentrated and high active share.
So to give you an example of a innovation frontier and innovation cluster, we're doing a lot of work and have done a lot of work on actually, and very excited about it and have some exposure in the portfolio. We call it Photonics for telecom sensing and manufacturing. That's a bit of a mouthful, but we're happy with that because this isn't something on everybody else's front of mind. This is technical specialist, but we think really exciting. And what it is we think optical components, lasers and bits and pieces that may manage the laser beams, if you like, are really proliferating in lots of areas of human life. One is fiberization of networks. That's a technical term describing the fact that copper can't do this job anymore. In the same way that your home broadband used to be fiber to the exchange maybe, and then copper from that point onwards. Then it became fiber to the cabinet, and then it became fiber to the home, what it is today. And some of you might have high-end audio systems and video systems at home, which have even fiber within the home. Because the more bandwidth you need, and we need more and more bandwidth to watch more and more streaming and play more and more games and browse more and more internet content, the more bandwidth you need. At some point, the mere physics of copper means that you can't transmit that signal for more than a couple of meters on a copper wire. And fiber has to take over. So you have this fiber proliferating through the network. And of course, the suppliers and into that space benefit. But beyond that, there's a real excitement in 3D sensing, which lasers enable. So this is not even a new iPhone, this is iPhone 12, so a couple of models behind. And it has a laser on the front that powers Face ID, that irradiates your face and senses the 3D structure. But it also now has a world-facing LiDAR, which makes the camera focus a bit better and will enable in time better augmented reality software that Apple will deploy. But of course, a lot of that is happening in the more specialist areas like autonomous driving or auto sensors or industrial sensors. And then in manufacturing, in many ways that you can mess with a physical material, you're increasingly doing it not through a mechanical or electrical mean, but through by means of lasers. Drilling, cutting, cleaning, inscribing, gluing things together, welding, increasingly is done by laser in more and more places. And it's already a large market. It's a 20 billion market today. It's growing 10%, even higher in some places. And these are all the companies that play. Some make lasers, some make components for lasers, some deploy lasers in their devices. But this is the cluster that we've researched. We met most of these companies relatively recently, and we've picked a couple for the portfolio, or one in fact for the portfolio.
So this is a walkthrough of our fundamental analysis framework, and we've picked Lumentum from the Photonics innovation cluster. And Lumentum is a global leader in lasers and optical components. And although it's an innovative company in its own right, in the innovation cluster, it's an enabler of innovation at its customers. And so if we walk through our 4 tests, firstly, the innovation test, we think is pretty clear. There's a large and growing market with a long runway. Moving on to the company test, which we think is particularly credible. Lumentum is a category leader with a high market share, and it supplies to demanding customers. And it's already translated that category leadership into the quality metrics that we're seeking. So they have high and growing gross and operating margin, as well as strong cash generation. In terms of ESG and H, the company has solid governance. There's no history of capital misallocation or ESG controversies. And then finally, on the non-consensus test, the market values Lumentum on a forward PE ratio of 14 times for a 7% free cash flow yield. And we think based on this, the market doesn't appreciate the quality, longevity, and sustainability of Lumentum. And so the company is a 6 billion market cap. It operates in a complex and changing industry, and some investors are distracted by market cycles and product cycles at some of their customers, and really miss, in our view, the structural opportunity. And that's what makes Lumentum a buy for the portfolio. Next slide, please. And as we look at the portfolio more broadly, we aim to have and do have a diverse range of innovation frontiers to capture the varied opportunity set that our approach to innovation enables, and to avoid being overly exposed to a single innovation frontier. And so this showcases the variety of opportunities available and represented in the fund. So from environmental and energy infrastructure through to home healthcare, as well as changes in digital advertising technology. And it also illustrates the flexibility of our approach to innovation investing. So for example, in home healthcare, we back an enabler of innovation, a company called Amati, which has a growing home nursing business. And this enables the transition of patient care from the hospital to the patient's home, which itself enables the development of new medical devices such as smaller and more mobile dialysis machines, as well as technological advances in chronic care management and monitoring. But then in other cases, like wireless connectivity, we back highly technical innovators, companies like Corvo and Skyworks, that are leaders in radio frequency signal filters and amplifiers, a much more technical and complex area of the electronics industry.
Great, and just a reminder of some of those key elements of the portfolio construction: 30 to 40 stocks, very high conviction, Totally benchmark agnostic in the way we approach it. So active share likely always above 95%, currently about 98.5%. We are putting some guardrails around the portfolio though, maximum individual stock weight of 10%, which we think we're unlikely to get to very often. We do like running winners, but we also like to keep that sort of healthy competition for capital going within the portfolio. Maximum sector weight of 50%, that's really there just to prevent style drift in towards, if we become a sort of move towards a very strong innovation frontier that maybe takes us a lot into technology, for example, this gives us a guardrail around that. Focus again on the sort of 3 to 5 year time horizon. So we're looking far enough out to be able to make a difference in terms of our stock picks. And really go anywhere, all cap, all countries. Again, focusing away from the mega caps, but towards some of those sectors where you're likely to see more innovation, technology, industrials, healthcare, that kind of thing. And using that broad diversification of pioneers, enablers, and adopters to give us that balanced approach that you won't find in most other innovation style portfolios. You can see here on this slide the current portfolio structure, and it gives you an idea about the split that we're talking about, so that the sort of diversification, very much a real geographic and sector split, as well as that market cap split. So even though our average market cap is significantly lower than the benchmark is around 370 billion average market cap, ours is about 36 billion. It still shows you very liquid and finding ideas across the full market cap spectrum.
And one thing we're really happy about with regards to this portfolio, and it really illustrates our approach, is its fundamental metrics. I mean, we're backing some of the most exciting innovation frontiers that you can think of, and we've described some of them. But this portfolio has a pretty reasonable valuation metrics in terms of P ratio. It has free cash flow yield. Our companies generate cash as well as profit. It's growing above market, so we are backing faster growing companies across the board. It generates pretty solid EBIT margins and return on capital employed. Some of those companies are still on that journey to premium economics, if you like, so the overall EBIT margin, return on capital employed, is a bit lower than the market average, but we, still a very solid level and pretty strong balance sheets. So this innovation at the right price, which some of that comes from being able to back enablers and adopters rather than the bleeding edge pioneers, and some of that comes from the fact that we unearth very technical opportunities that lots of other people just not comfortable getting involved with. So maybe just to summarize, really excited about launching this fund, playing to our strengths, targeting a very large, growing and very diverse opportunity set. So a fantastic set of ideas for stock pickers like us to choose from in an environment, in the segment of the market with distinct market inefficiency, and therefore a real opportunity to outperform if you apply a disciplined process to target that. We think the team track record and Amati positioning brings real informational analytical advantage and hopefully gives us credibility to do our best work for you. And we've done this before, and this is literally taking the best of what we've done historically and doing it on a platform where we're really excited about. We've built a very rigorous, dare I say, institutional grade research process that tackles that complexity, that uncovers those opportunities, but also manages risk. And we are seeing that in our portfolio. It's high conviction, it's high active share, it's full of really exciting ideas, but the risk is balanced. There's clear differentiation from the global market, and we think it will be more resilient, and it has proven more resilient than many other innovation-focused portfolios to the sort of volatility and growth sell-off we've experienced over the past months to a year. So thank you very much for your interest, and I'll pause here and we'll open up to questions.
Good stuff. Thank you very much, Mikhail. We have had a few questions in, and the first one actually was on the availability via retail platforms of the fund. We've approached all the platforms, and I can confirm that the ones that have already stated that it will be on are AJ Bell and Hargreaves Lansdowne. The platforms tend to respond to demand from consumers. So if there are other platforms there that you use specifically, if you could feedback to them, that would be appreciated and helpful. The second question was on the crossover between this fund and the VCT and the smaller companies fund. So I wonder if I can sort of put that to Paul. Could you make some comments on what sort of crossover and what sort of advantage we maybe have from the VCT for this fund?
Yes, thank you, Colin. I think in terms of holdings, there won't be any crossover, I wouldn't expect, really, between this fund and the VCT or the UK Smaller Companies Fund. If there was, it would it'd be one stock at the very most, but it's so it'd be right at the edge. But I'm not expecting there to be any real overlap. And clearly, this is a large cap focused or global equity fund. It may have one or two investments at the smaller end. So it's not, it's theoretically possible there'd be one or two stocks that might overlap, but I think it's unlikely. But on the other hand, as Mikhail and the team have been explaining, there's a very useful overlap in terms of our research, and we're certainly looking forward to benefiting from the research that the Innovation Fund team are going to be doing, and vice versa. And so sometimes big ideas happen in small companies and then they feed out commercially. Often it's the bigger companies who actually get the best benefit from the innovations of smaller companies. So we can share that knowledge, I think, very usefully between us.
Okay, thanks, Paul. The next question. Obviously, this is a new portfolio and hopefully sell decisions are some way off. But can you describe what your sell discipline will be, and will you be fully invested from day one?
Sure, I can take that. So our sell discipline in some ways is a mirror of our buying approach, which is, do we have a non-consensus view on the impact of this innovation on the fundamentals of this company, compared to what market's pricing in, compared to what sell-side forecasts are factoring in. So just as buying into the company, we will be modeling the implication of innovation success, be it pioneering or enabling or adopting that innovation, and seeing what it does to the financial metrics of the company and likely impact on valuation multiples, and seeing if it's different from consensus. When we converge with consensus, because the case has played out, we no longer have that non-consensus view, and therefore we'll be wasting investors' capital backing the case where the market already thinking what we're thinking. Equally, we might be wrong. So we will meet companies regularly, we'll review the case periodically, or new information might come to mind or come to our attention that contradicts the original case. Again, if that invalidates their modeling assumptions or just a qualitative judgment on the value of that innovation, we will be wasting investors' capital backing it. And finally, there might be exogenous shocks or threats, which could be macroeconomic, can be technological or regulatory, and occasionally could be governance-led. There's a real lapse in governance, and we no longer have confidence that management will be running this business for the interest of their shareholders. Then we will avoid those existential threats, if you like, and we'll step away.
Great stuff. Thank you, Mikhail. The next question is, I'll read it out. Given the recent high growth technology significant sell-off, many companies 50% plus down, in which of your pioneer, enabler, adopter categories are you seeing the best opportunities at the moment? Who'd like to take that, Graeme?
Sure, yeah. Yeah, I mean, it's as Paul kind of alluded to at the start of the conversation, we think this is a great time to be launching the fund, because some of these moves have been very significant. And obviously there were, as I kind of mentioned, there were some quite overvalued companies in our view. The sell-off has been pretty indiscriminate, particularly around that kind of pioneer end of the market. And so we do feel there are some babies who have come out with the bathwater, as it were. And so, where we might have had the balance 3 months, 6 months ago has moved a little bit, skewed a bit more towards pioneers than it was than it was then because of the sell-off so far this year. So again, I think that sort of highlights the flexibility we have on the fund to kind of adjust where we're seeing the opportunities across those three categories. And as far as we're concerned, this sell-off has been very timely and helpful.
Thanks, Graeme. Are all the companies in your portfolio profitable, and is that a policy? Mikhail?
Pretty much, yes. It's not a policy. So we can consider a company that's not making money or not generating cash if there's a clear roadmap to making money, generating cash, and kind of enjoying the premium economics associated with innovation on our sort of up to 5-year time horizon. But we have to have that confidence. So we're not interested in a company that's doing something fantastically interesting and scientifically important that we don't have roadmap to profitability that we can believe in.
Thank you. There are other funds which focus on innovation. Where are you different?
I mean, we have our vantage point. Our clients would have theirs. So my take would be that there will be some innovation funds that do not have the same, ability to embrace and understand complexity that we have, and some of that, we would hope is our individual background, but some of that is the informational advantage that we get through a Amati platform, which I can't emphasize enough how much of a difference that makes. So there'll be one differentiation. There'll be, we hope that our experience and track record of our performance in this specific area is another differentiating feature. We're not launching something with a kind of 3-year track record and not much history behind it. We've worked in the industries. We've run global equities, concentrated global equities portfolios, and concentrated portfolios overall for more than 20 years in both of our cases. So this is probably another one. And the third one is this broader approach. A lot of innovation investing happened at what we describe as pioneer end of the market, which we now see, and frankly we always felt, is just one of the ways to benefit from that opportunity, and probably exposes clients too much to the risk appetite and interest rate environment that is now reversing. I think next 10 years will be somewhat different, and more quality awareness, more valuation discipline, and this broader approach to innovation investing will be more relevant to most people's investment journeys.
Great, thanks, Mikhail. We've probably got time for one more question, which would be: you mentioned quality. How do you define quality?
Yeah, shall I take that one? We define quality as from a kind of financial perspective as well as from a qualitative perspective, in the sense that we're looking for the sort of metrics for companies that can achieve high return on invested capital, typically companies that have high margins and very little balance sheet risk. So, from a financial quality perspective, we're looking for, our focus is on preservation of capital as well as growth. So it's a combination of companies that have that strong growth potential, but achieve it with the right financial metrics. But then also, ultimately, you're buying not just the opportunity set, the innovation opportunity set, but you're buying the management's ability to achieve that. And so we focus a lot on quality of management, track record, and their kind of allocation of capital history. So there are lots of different elements to quality, but I think those are the core ones from my side.
That's great. Thank you very much, Graeme. So I think that's all the questions that we have time for. So thank you very much for your interest, and thanks for your questions, and thanks to the team for the presentation. I'd just like to summarize where the fund may fit into portfolios. If you're underinvested in global funds, this fund is a highly active, differentiated strategy targeting distinct market inefficiencies and sources of alpha. If you already own global funds, this fund is likely to add incremental opportunities from specialist complex areas. And if you already allocate to innovation funds, the fund's likely to diversify your exposure away from those increasingly volatile, high growth, low profitability businesses that we've spoken about earlier. If you have any further queries or comments, please contact one of the sales team shown upon the slide there, or on our website, amatiglobal.com. But for now, thanks again for your interest and your questions. And until the next presentation, goodbye for now.